myself Vaibhav. In today's session of Visual JForex, we'll be starting afresh with a new indicator named SMI, Stochastic Momentum Index. We will see how we can design and develop the algorithm using this indicator on the Visual JForex platform, which has been developed by the Dukascopy Bank SA. So let us get to the work. You will find this indicator listed amongst the momentum indicators. As the name suggests, it is a momentum indicator. It gives you the idea whether the underlying momentum is bullish or bearish, and accordingly you can make your trading choices. If it is bullish, it is always a better idea to go for a buy trade, and if the momentum is bearish, the natural choice is to go with the sell trade. This is the indicator block, and compared to other indicator blocks, as we have worked with many of the indicator blocks, you might be well familiar that in case of this indicator we have to define a lot more input variables, and using these input values we get to the output value, and this is because we have to define these values for the different indicator component periods: fast K, slow D, and smoothing period. So using all these input values, you can better customize the indicator, and that is going to increase your probability of making the profitable trades. So that's the idea behind all these sophistication which we find in this indicator. This is bit different compared to the stochastic oscillator. I have plotted this on the Euro USD chart. I will change it to the hourly time frame. And here we have the SMI plotted on the hourly time period for the Euro USD. And as you can see, when we have the price decline, the SMI values tends to be in the negative territory. When we have the price rise, the SMI values tend to be in the positive territory, or you can say vice versa. If the SMI is in positive territory, then the value tends to be rising, and if the SMI is in negative territory, the price decline is more probable. So it works both ways, and the idea for the trade setup in today's session is going to be quite simple. We will be utilizing the differentiating marker of 0. If we have the SMI value above 0, that will be considered bullish, and if we have the momentum output value below 0, that will be considered bearish. And here, if you consider the traditional use of this indicator, then when we have the value above 40, it is considered a strong bullish momentum, and when we have the value below minus 40, it is considered bearish. What we will do is we will be taking the output band of in between 0 to 0.20, and also we will be utilizing these two components, SMI and the signal, and whenever we see the crossover, we will be using a crossover structure. Whenever we have the crossover, that will be used as a initiation point for a new trade. So when we have the SMI and the signal value above 0 but below 20, and as and when crossover happens and we get the SMI value above 20, we will be looking to initiate the buy trade. And when we have the SMI and the signal value below 0 and the crossover happens afresh, we see the SMI dipping below the signal line. That will be the time to look to initiate the new sell trade. So that's going to be the logic behind the algorithmic setup which we are going to define for this session. So now let us go back to the Visual JForex board. First thing first, we will need to get the instrument subscription done. We are going to need a blocks. We will use this default instrument, and this time around we are working with the on candle as a start point. So we need to match the last as candle instrument, and here I will define the instrument using this feature. Okay, this is done. After that, we have to look at the position amount. Shift will be 1, and I will change it to hourly. We are going to need two of these blocks, one with a shift value of 1, another 2. Value of 2 for this. As we are going to use the crossover structure, we will be needing to compare these output values amongst themselves as well as with the prior time period. So we are going to need two of these blocks, and then we will be also using the info components, the get historical candle cluster and the single get historical candle. We will also need the loop viewer to retrieve the individual components here. We will use these output values to compare the price action over last 5, not 5, we will take 4. So I will change this to 4, and the time period will be changed to hourly. Shift will be 1. This I will change to hourly. We will utilize this block to look at the last hours closing at the opening value and take the difference of these closing and opening value and compare it to the minimum requirement. We will need two more of these get historical candle blocks. Info. Will be changed to 10 seconds. Shift value of 1 and 2. And after this, we will also need to get in the mathematical blocks, calculation expression. We will define two requirements straight away. That to define that, we will need to get two values. One is going to be 20 pips, that in last 4 hours the difference between the high and the low should have been more than 20 pips, and for that we will be comparing this predefined value with the 4 hour. This candle 17 high and the low value, and look at the actual difference and compare that with the predefined value. And in last hour we want the closing in case of a buy trade to have been higher by at least 7 pips, and for a sell trade we will need the closing value to be lower from its opening value by at least 7 pips. So two calculations which need to be done will be carried out in this session. Before we wrap up, all we need to do is multiply the default instrument pip size with the requisite value using the new variable. It is going to be 20, and calculation will be A1 into A2 and one more new variable needs to be created with the value of 7. Okay, so these two values have been defined now, and as we are now running short on time, I will stop here, and in